Good morning, everybody. It's Wednesday. It's August the 26th, and here is what is on our agenda. Oil and gas prices are dropping as Iran and Oman discuss a maritime corridor through the Strait. Nvidia earnings take centre stage as we continue to chart the AI industry's massive data centre expansion. And the US is considering even more tariffs on Canada as the trade war spirals.
European futures pointing modestly higher by about 0.1%. Those risk events, of course, being factored in by investors. Gains of 0.3 by the close yesterday, so building on that very modestly today. It does seem to be a bit of a disinflation trade or theme, at least in the last few hours, and we'll see if that continues. Anna pointing out, of course, the drop in the oil price, currently down 1.8% on Brent at just shy of $87 a barrel. Euro dollar, interesting at 116, just a little softer by 0.1%, despite the fact that Isabel Schnabel has come out and said rates need to be higher. That is already effectively priced in for September. She's known to be hawkish, so we continue to watch the single currency currently at 116. The countdown to the opening trade starts right now.
Welcome then, everybody, to the opening trade this Wednesday morning. Once again, Tom, we're back to focusing on developments in the Middle East. That's one of the agenda items. Of course, we've got tech earnings from Nvidia later. We'll get to that, certainly, and trade tariffs continue to be topical. But let's start by thinking about where we are on Iran, because we do have a slightly weaker oil price. It was down more than it is now an hour or so ago. It's been down by more than 2% in this morning's session here in Europe, but now down by 1.8% on Brent. In fact, it's the third day that we're seeing this drop in Brent prices, and gas prices also substantially weaker, down as much as 6% in the earlier part of the trading day, now down by 4.4%. So we'll watch to see whether this offers any risk sentiment boost for European stocks. The futures are pointing a little bit higher. It isn't helping US futures. It hasn't had that link perhaps in the past. But this is all because we've seen a statement from Iran and Oman saying that they are talking about a framework to resume traffic. It's talking about a temporary joint maritime corridor, talking about demining the strait as well. I mean, it's all very incremental and just baby steps, according to some analysts. But it does seem to be having at least some downward impact on the oil price.
The optimists in the market seeming to think that this may be a bridge to a broader deal that brings in the US. And there's all sorts of caveats around that, of course. But that is where at least the optimists seem to be leading, and that is driving oil and gas prices lower. Who would have thought, though, that at this time this week, after this D-Day on Iran, that Scott Bessent, the Treasury Secretary, announced, of course, on Monday, that this is where we'd be on energy prices. Energy prices lower and bonds getting a bid. And to Scott Bessent's credit, the Treasury markets and yields do seem to be capped to some extent. Treasuries are actually outperforming. There's questions and a debate as to whether or not the Bessent put is there at the long end. But inflation is a beneficiary, at least is beneficial to the Treasury Secretary, and possibly good news as well. We get the PCE data later, and then, of course, Kevin Walsh and his comments on Friday. But it does seem to be aligning in a slightly more positive direction for the Treasury Secretary, and arguably the Fed chair as well.
Right, yes, as we move towards Kevin Walsh later in the week, that is interesting. Maybe there's a difference between their perspectives here. But it is interesting, as you say, that there does seem to be this, the reflection of a Bessent put in the markets. Is this acting as a bit of a backstop at the long end of the curve in the US, as it outperforms, as you say, the rest of the world? But fundamentally, is this all driven by the deficit? And fundamentally, if you want people to focus on the fundamentals, do you not have to take some action on the deficit? And maybe that's the view of some of the guests that we're going to speak to today on this subject. We'll get into that. We've heard from Thomas Barkin at the Fed, and he's agreeing with some of the sentiments that we've heard from those who are alarmed by the extent of the debt in the US, saying, you know, it's okay for now, but it's okay for as long as it's okay, and then at some point it's not okay. There could be, in his words, a reckoning. He was asked about what this high level of debt could mean.
Those structural issues are still there. There's still going to be huge issuance by the US Treasury, of course, to fund that deficit. There's also issuance coming through, of course, and we've talked about the competition for capital from the hyperscalers and from other major players in the AI space, which brings us to not just a corporate event, but the macro event that is Nvidia. The expectations are that revenue could double, around $92 billion US dollars, earnings per share expected to increase to above $2 per share as well. There's going to be a lot of focus on what Jensen and the team have to say about the outlook, about the scale up as well in terms of the new chips that they have in the pipeline, and of course the questions about margin, whether they're able to preserve that 75% margin, what they're doing, how they're managing the supply chain, and particularly around high bandwidth memory. But will they give a convincing case and present the data that suggests that there is continued demand and support most, and the consensus view is that they will.
Yeah.
How the stock reacts on the back of that is a different question.
That is a different question. It often is a different question, isn't it? But it will all help to illustrate what we know now about return on investments in AI. Is the case there? Is it delivering what we expect it to deliver in the time horizons we expect it to deliver for the customers of Nvidia, and therefore are they ordering more? We might get some shades of some light shed on that particular subject. The appetite for the hyperscalers continues, it seems, for these products. Interesting, Palmy Olson of Bloomberg Opinion reflecting on the increase in pricing that we've seen from Nvidia over recent days, and saying that customers for Nvidia might have to make like the Chinese a little bit more and get used to having to work around some of the supply chain issues, and that might include higher prices, and they could all learn a bit from the Chinese about how to maximise what they're spending with companies like Nvidia.
Lessons from China, potentially, and certainly it may accelerate the competitive shift as well. We're seeing, we've had reports, in fact we've been speaking to the chip czar, the head of OpenAI, talking about the progress they've had there with their own jalapeno chip, and the fact that according to their metrics and the testing, it actually outperforms some of Nvidia's chips on some metrics, particularly around inference, which is just a reminder that even a number of customers of Nvidia are building out their own chips to try to ensure that they have some ability to diversify.
Yeah. And what is the life expectancy of the things that Nvidia has produced some 5-6 years ago? That's also going to be interesting. We'll talk to a guest a little later. Clare Pleydell-Bouverie will be with us from Liontrust to talk about that. Let's talk about tariffs as well, Tom, because that is, of course, another subject of conversation that is just not going away in a hurry. And it seems that the latest news lines here is that from our colleagues in Bloomberg News, the US is readying an increase in tariffs yet again. That could be a higher rate of tariffs against Canada. It could be a wider range of goods. And this follows Canada ramping up its tariffs. You know, we're into this cycle now. Canada has matched roughly the dollar amount that we're seeing in terms of US tariffs. And we've seen them increase tariffs on US steel, US aluminium, and a whole host of products that will be familiar to consumers in Canada. So dairy, clothing, video game consoles, smartphones, electronics. Interesting to me that from our reporting, the CEOs of Bank of Montreal and Bank of Nova Scotia are saying they think this is manageable for the Canadian economy. The industry minister, I think, in Canada, calling on Canadians to buy Canadian as one of the tactics for trying to shore up the Canadian economy and how it fares under all of this pressure.
And domestic politics at play on both sides. Clearly, this is a popular stance in Canada. It's a popular position in terms of how to confront the Trump administration. But the domestic politics of the US also being factored in, it seems, by Canadian officials, because they're targeting products that come into and would be exported from states that will be in play during those midterms, including the likes of Ohio, Illinois, Pennsylvania, Michigan. So there's that consideration as well as we lead up to the midterms. We're also getting a reminder that there's no sign that China is going to be backing down in terms of its trading with Iran as that pressure campaign from Washington continues to try to convince China to wean itself off that Iranian oil and the support that it provides for the Iranian economy. It seems like China, at least Beijing, is drawing a strong red line and a hard line around that relationship.
Yeah, the extent of the secondary tariff ask from the US of China is quite unclear, isn't it? But China seemingly fighting back anyway and saying, you know, there are limits to what they're going to do. Let us tell you what is coming up in the programme, the guest conversations we're going to be having. We'll talk about corporate credit. Madelaine Jones will be with us, Oaktree Capital Management Portfolio Manager. Part of that conversation is about the rollout of debt raises by hyperscalers, and we'll talk about that. But there are other dynamics in credit right now. Wei Li will be with us, Blackrock Global Chief Investment Strategist. So lots to talk about there about debt markets, in fact, but also we'll focus in on the market open here in Europe for equities. And as I mentioned, Clare Pleydell-Bouverie will be with us, Liontrust Global Technology Fund co-manager, and she believes that the lifespan of these chips, these GPUs that are already installed from Nvidia, that it's actually longer than anticipated. What does that mean for the Nvidia investment case?
Yeah, really granular insights in terms of the outlook for Nvidia coming up through the show. Then let's look ahead at what else we are watching throughout the day. 11 a.m. UK time, the ECB's Cipriani will be speaking at the Bundesbank event in Frankfurt. We've been hearing from Schnabel, of course, making the case for higher rates from the ECB, currently at 2.25%. At 1:30 p.m. UK time, we will get core PCE. That's also a key market event, expected to show a continued sticky inflation in the US above that 3% level at core. 4:45 p.m. UK time, we'll get more reaction from some Fed speakers. The Fed's Parton will be speaking, so we'll listen out for that. And of course, on the earnings front, it is the big one. It's Nvidia reporting earnings, of course, but also not to completely overlook numbers coming through from Okta, CrowdStrike, Salesforce and HP aftermarket. But for us, of course, central will be the Nvidia story.
It will, but the other corporates there also giving in a different part of the AI build-out story, so we'll get to that. Just coming up to 7:10 here in London, coming up on the programme then, Banco BPM appears sceptical about a takeover offer from rival Italian lender Monte dei Paschi. We will go live to Milan. We'll get you the latest. Plus, OpenAI says its new chip can outperform Nvidia processors in tests, as Tom was referencing. Our colleague in San Francisco has been talking to them. We'll bring you that exclusive interview with OpenAI's chips chief. And up next, we will be joined by Virginie Maisonneuve, the CEO and founder of Maisonneuve Advisors. That conversation shortly. If you have questions, please do get involved. We do like to hear your views, your thoughts this morning and every morning. IB plus BBTV Go. That's the function to use to get in touch with the team. This is Bloomberg. This is the opening trade. Welcome back, everybody. Wednesday morning, 7:13, just coming up to 7:14 here in London. And the European equity market picture, as far as the futures picture is concerned, looks, well, pretty flat in some cases, a little more buoyant in others. And, Tom, we've got a host of things to watch out for today. We've got PCE data out of the United States, core PCE later. We will have the Nvidia numbers also. And so with all of those things in mind, maybe there are limits to how much optimism we can create from a Brent price with an 86 handle.
Yes. How many significant bets do you want to be putting on ahead of that detail coming through on inflation and from Nvidia? Drum roll then towards Nvidia, of course, and that company snapping a 7-day run of losses overnight, closing higher by a little over 2% as the chip giant prepares to deliver company earnings after the bell today. The results are being closely watched, of course, by investors who are looking to gauge the state of the AI industry's massive data centre expansion. Let's bring in then Bloomberg's Anthony Stevens, who's always granular on this story for us. Anthony, what are you and analysts going to be looking for when it comes to these numbers from Nvidia later?
Look, the headline numbers are going to be strong, right? It's going to be another monster quarter, 90 billion odd in revenue, 75% margins. But those margins are what's going to be in focus, right? They've had to take these huge memory price increases from Korea, these huge component price increases from Taiwan and the rest, and they've looked to pass on some of them kind of belatedly over the last couple of months to server customers, like 15 to 17% price hikes. But is that going to be enough to keep the market calm around how defensible these margins are? Now, on the other side, you have the customer base come up and do competition on the custom chip side of things, right? So you had Alphabet, Amazon, Microsoft, and now OpenAI having these custom chips that are increasingly sophisticated. They're just not stopgap measures. They're actually at the frontier of chip making. OpenAI, in particular, has led the way by developing its chips using AI so that they've only had a 9-month lead time to catch up. So how Jensen Huang, with his trademark confidence, how he addresses these concerns is going to be important. It basically has to redraw kind of the roadmap for the AI investment boom. And that is because Nvidia is such a pivotal part of that AI investment boom. They are investors from everything from data centers to venture capital. Just to run through the numbers at the top end, the market expects around a 5% move in the stock. The average price target on the street is already 47% above where the market price is. And on the pure technicals, if that 5% move is to the downside, you break the moving averages. If the 5% is to the upside, you're set up for a breakout. So really pivotal numbers here.
And help us understand a little more as we go into these numbers, and Anthony, the pricing story around Nvidia and the pricing power they have, because those stories over the weekend about Nvidia putting up prices in some product areas could be taken either way. You could say, well, this is good for Nvidia; it shows they have lots of pricing power, or you could say, well, this is worrying for their margin because, you know, just like lots of other companies, they're facing higher memory costs. Which story do you choose to tell about that higher price story for Nvidia?
Absolutely right. And it really depends on the strategy that they're going for. Are they going for incremental price increases just to maintain market share and avoid alienating some of its customers who, as I said, they have this new chip making capability on their side as well? Or are they actually going to continue to pass on these costs? So we've seen a lot of volatility in its suppliers and its customers in the last couple of days. Pretty binary, right? You're seeing Hynix swing around 6 or 7% intraday into the numbers. So the market has not decided what theme it wants to select. Also, bear in mind that all of its components are under margin pressure. So you have memory costs being passed on from Korea, you have optical costs being passed on from the Chinese and the domestic sector, you have all kinds of passive costs being passed on from the Japanese. They need to transfer these costs to their customers and convince these customers that the silicon that they are producing is of higher value than you can produce in-house. Now, that is a needle to thread that only Jensen Huang perhaps can get away with communicating.
Anthony, thanks very much. Bloomberg's Anthony Stevens with a preview then of what to expect from Nvidia specifically. Let's widen the focus. Virginie Maisonneuve joins us, founder and CEO of Maisonneuve Global Advisors, friend of the show, regular guest. Virginie, thank you very much for being with us once again. You say in your notes ahead of our conversation that we are witnessing the rebuilding of the global economy around power, data centers and chips. And that makes macro events of things like Nvidia earnings. So with that in mind, what do you look for when it comes to an Nvidia report?
Well, what you're looking for is surprises, to try to anticipate what's the next trend. We know competition is coming, so where's the positive surprise, where's the negative surprise? Positive surprise could be that their client base expands, that other people can really access their product. Right now, it's been quite concentrated. Negative surprise, do people pose on Blackwell because they're waiting for Rubin? And of course, the general environment around cost of capital. How can their clients continue to build if the cost of capital really increases on the long end? And I think that's the pivotal question. Is AI inflationary or deflationary? Probably a bit of both.
Yes, so that's interesting. So on the AI build-out, the rollout of these data centers, what is the limiting factor, do you think? Is it a higher cost of capital, Virginie? Is that going to be the thing that not necessarily brings this to an end, but keeps a lid on the pace?
I think there's several factors. Cost of capital is absolutely crucial. Cybersecurity, soft factors, governments concerned. You know, how do we put a frame around it? I mean, we've talked about framing it like pharma, for example. You know, this is a very, very powerful tool that India and you are building. Those soft factors are not organized yet, if you want. And I think over the next 12 to 18 months, we're going to have more clarity on that.
What are you expecting then in terms of how that impacts margins, not just for Nvidia, but others within that space at the forefront of this story?
So I think margins will come somehow under pressure. I mean, look at bank margins. We had the bank, results in the US, 3.3%, net margin. Look at Nvidia, 75%. Of course, very different product. But, if you go back to a reality check and you think that the power of AI, the power that AI gives to our economy and to our intelligence, is absolutely massive. But there is a risk to it, and people are talking about how you can put a framework around it. And I think that will cap some of that upside, if you want, in margin.
How much conviction do you have that Europe can gain and European corporates can gain, particularly on the adoption side of the AI story, and whether or not there's an opening there for investors?
Adoption, absolutely. In terms of creation, I think it's clearly a China-US game at this point, but adoption, absolutely. And it's how can we be smart at, the energy equation, the data center equation. That is really, really important. Cost of capital, of course, again. And we had the news this morning that the ECB, sort of led us to believe that, we need to be careful about rates. They might increase. Right?
OK, and you do think then that we are heading for, or at least maybe already in, an environment where the cost of capital is structurally higher than Virginie.
Yeah.
So what does that mean about asset allocation to stocks in particular? Are we going to be looking not just for those companies that will win from the AI race, but also have the capital discipline to go the course?
So I think volatility is key. So I'm not forecasting, a big fall in the market. I think volatility is key. You want to be in the diffusion theme now in AI. So the propagation, it's the whole digital Darwinism theme that we've talked about for many years now. That is, in fact, happening. And you want to diversify. You can see how the leadership in the market more recently around some pharma, some financials, etc. You really want to have a balanced portfolio with still a very important bet in technology, but much more granular. You want to understand how cash flow and profitability, sustainability in the profitability is going to materialize over the next 3 to 5 years. 3 to 5 years in technology is a very long time frame.
What is the US Treasury Secretary's role in that cost of capital story?
Yes.
Are you convinced that there can be a cap on yields at the long end as a result of the actions of the Treasury?
I'm not convinced. I mean, we'll see what Jackson Hole tells us. I think we'll have a pretty neutral message and a framework message. We won't have a message on rates. Clearly, there's a midterm election coming. And you know, the speed of adjustment was such that, you know, it was logical for him to take some action. But if you look at the impact over the medium term, those kind of actions tend to be really diluted because the forces of the markets in terms of issuance, in terms of competition from AI, in terms of government deficits are there. And most likely we'll see rising rates.
And is there a tension, do you think, between what we're hearing from Walsh and what we're hearing from Bessent, Virginie? Because Bessent seems to be quite an interventionist Treasury Secretary, whereas we now have a chairman of the Fed who is doing his best to say as little as possible, it would seem, and guide as little as possible.
Yes. So tension, contradiction, or coordination with, you know, both approaches to help the markets in a way decide for themselves. I think the markets will tell us what they want.
Virginie, thank you very much. Thanks for joining us. Good to speak to you. Virginie Maisonneuve of Maisonneuve Global Advisors, founder and CEO.
OK, here's what else you need to know this morning. The queen of country music, Dolly Parton, has died in Nashville at the age of 80. The New York Times reported the cause as cancer, citing her representatives. Parton emerged from extreme poverty in rural Tennessee to become, of course, a renowned songwriter, singer, performer and businesswoman. As a philanthropist, Parton started the Imagination Library, which has given more than 300 million free books to children since 1995. She sold over 100 million records with some of her most famous songs, including Jolene and 9 to 5. In other news, Bloomberg understands that Meta and US states have discussed a possible mid-trial settlement over accusations Facebook and Instagram were deliberately designed to addict teenagers. 29 states are seeking massive financial penalties and mandatory changes to how the platform operates. By Meta's own calculations, a loss at trial could saddle it with penalties of as much as $1.4 trillion, an amount close to its market capitalization. Bloomberg understands Russia is considering extending its ban on diesel exports for another month until October 1st as Ukraine steps up attacks on Russian refineries. We're told the government is discussing the move as airstrikes this month match July's record pace, adding pressure to already tight global diesel supplies. This happening, of course, and a reminder of the pressure that is being brought to bear domestically in Russia, with examples of people lining up at the pump because of shortages there. And also an intriguing development yesterday with the CIA director flying into Moscow. It seems for a short period of time. We don't know what the details of any conversations were, but it's pretty unusual to have that high level in the security services of the US on the ground in Moscow, of course.
Flying in via Latvia and out via Latvia, it seems, and everybody in the loop on this, keeping very quiet about what this was all about. We've seen a lot of concern about whether Russia might try to retaliate against any of the countries that have been supporting Ukraine in the sense of selling weapons to Ukraine or providing defensive capability to Ukraine. So lots of European governments on alert. We've heard from officials around any sabotage, around infrastructure attacks, false flag operations and the like. So, you know, was it about that? Who knows? We don't know. And but it does come in the context of Ukraine struggling to defend itself, but also having some considerable success in hitting these refineries, as you point out, in Russia. Coming up, we'll return to the earnings story around Nvidia. The company report set to give signals perhaps to, well, all markets. What will it mean for debt-funded AI infrastructure build-outs? We will discuss with Madelaine Jones, portfolio manager at Oaktree Capital Management. That's next. This is Bloomberg. Welcome back, everybody. 30 minutes then from the start of cash equity trading. Let's keep one eye on the futures picture this morning. We're waiting for the Nvidia numbers, waiting for core PCE out of the US. So a lot to think about later on in the trading day, perhaps, and indeed after the US trading day. But this is the futures picture for now, lifted perhaps a little bit by a weaker oil price, $87 or so dollars on the Brent price, Tom. Suggests there could be a little bit of upside for some companies that are going to benefit from a lower oil price. But we take, 1.8% is not a big move in oil prices these days, is it?
No. Lower oil typically, of course, a beneficiary for the bond markets, and yields are modestly lower across the European sovereign debt space as we start to see trading there. Yields down about 1 basis point, as you can see, in Germany and over in France as well. OETs, though, still above that 4% level. We have inflation data, PCE, of course, out of the US later. And we have Isabel Schnabel saying that further increases in rates are needed. So all those being factored in, it seems, but a little modest bid for some of the sovereign debt of Europe. Let's zoom out to what is happening in terms of the Nvidia story and the impact there on this competition for capital that we're seeing. Nvidia's second quarter earnings due later today, of course, and for credit markets, the spotlight will be on what they signal for the enormous debt-funded AI infrastructure boom. We're showing a chart right now in terms of the outperformance of investment grade in the US versus CCC, lower-rated debt, of course. Let's get more analysis and bring in Madelaine Jones, portfolio manager at Oaktree Capital Management. Madelaine, good morning. Thanks for joining us around the desk this Wednesday. How much level of comfort is there in the markets right now in terms of the issuance that we're seeing, enormous debt issuance that we're seeing into these markets to fund the AI build-out?
That's right. Of course, this is going to be a huge capital need in many ways over generations. This is a shift which needs infrastructure of a significant scale. But for my markets, I'm in European high-yield bonds and European syndicated loans. It really hasn't touched our space much yet. You've started to see it in US high yield, a little bit of issuance, and I think we saw a US loan being issued to fund it. But of course, our capital is a little bit more expensive. So I do think it will come into our space. But for now, it's been fairly nascent. So with that in mind, we have time to analyse, time to prepare, time to think about what are we going to do when this issuance eventually will come, because it needs to be financed somehow. We have a bit of a trump card here. This quarter, we completed our partnership with Brookfield, and of course Brookfield are significant investors in this space, have huge amounts of knowledge in underwriting contracts, supporting these long-term investment proposals, in looking at credit quality. So we'll be drawing on all that skill to inform us how we best position around investing into the hyperscaler space.
Do we expect further issuance in Europe then? What is the credit impulse here?
Well, Europe is a little bit behind on the infrastructure needed for this generational shift. I think our focus here is more around the use of AI in technology, in business cases, and how that might impact the businesses that we own today. So we do a lot of deep dive on disruption of AI. And we're in the early stages of that, so we also need to be quite prepared for what that could look like in the future. Where we sit is in liquid credit space. In European high yield, very, very limited technology and software issuance. It's much more, all manufacturing and nuts and bolts, which you can lend more significantly around without that disruption element. In loans, there is a bit more technology, a bit more AI disruption risk. So we watch that space with care. We actually, last year, we were in liquid loans. We have the ability to adjust our positions. Last year, we sold a third of our positions because we felt they were exposed to AI disruption, and we wanted to manage that down. So it's been active management, constantly learning from what's changing in the world. We can adopt our portfolios.
Yeah. So good morning to you, Madelaine. So from what you've said then, so the companies that you're investing in or exposed to, are they more exposed to the risks of AI than the opportunities?
I think we see the opportunities in the future issuance. At the moment, we've got to be careful about the risks, and that's very much an Oaktree identity. We are credit investors, after all. We're not equity. We're not going to get the wonderful upside from things going right. We've got to pay attention to the risks that can go wrong. We have a wonderful yield opportunity in high yield and loans. We want to capture that for our investors. We don't want to give that up from bad credit, from bad defaults in the portfolios. So our focus is on downside protection, and in amongst all this amazing shift in technology, there will be some businesses that are impacted, and we have to make sure we identify those and manage them out or not own them at all.
Yeah, okay, yeah, preferably. And are we facing some sort of maturity wall within your space? And if so, when does that come? Because I'm still thinking about, the period around COVID. A lot of businesses, they took the opportunity to refinance at extremely low interest rates. And, maybe we're still in the sort of long tail after that. So where are we on maturity walls?
That's a really good question. So 2008, you start to see a pickup in maturities in loans and bonds in Europe.
2028.
2028.
Yeah.
Thank you. And I think there, within that cohort, especially in loans, you see some technology, some software exposure. Remember, this was a cohort put on when rates were quite low. So already that's a cohort which has had to face rising debt costs. And so there will be some weaker end of the market there which can't afford to pay their coupons on their debt with rising rates. And there are a number of technology stocks there which will face a challenge for investors underwriting that again for another 7-year term. How do they think about underwriting the AI risk in technology for another 7 years? And we've started to see, especially in the US, where there's a bigger component of technology, we've started to see that coming to market and try to get refinanced. Normally, it's the good companies that come first, so we're happy to underwrite that. But around the edges, there will be difficult, more challenged ones where AI disruption could be more significant. And there you're seeing higher prices of debt. You're seeing different kinds of structures which amortize. We haven't seen amortizing loans for quite some time. So you start to see investors demand evidence of amortization to finance the next slug of investment. So
to be clear, 2028, you get that refinancing and there will be, you expect a tick up and a spike in defaults?
I expect a tick up, a spike. I think we're moving from maybe 2 to 3% to possibly 3 to 4%.
3 to 4% defaults?
We're still talking about very small numbers, which means 95% or so of the market is very money good.
So spreads will stay really tight then, even through that maturity wall?
For the good quality companies, I highly expect there'll be lots of demand for those credits, yes.
What expectations are you making about structurally higher inflation, structurally higher rates?
We've got to think about that. We're long-term investors. We've got to think about what that means for our companies. So every time we're underwriting, we're building these portfolios loan by loan, bond by loan.
Is that the assumption that you're making?
We have to assume
will be structurally higher.
We need more cushion. We always underwrite with cushion in our cash flows to make sure we can tolerate many different environments. And when we underwrite, we're not experts in calling where the economy will go in 3 or 4 or 5 years' time. But we have to underwrite with a view that it can tolerate it. Can the companies tolerate different economic conditions? We're in credit. We don't need abundant growth. We need good growth. We need fine conditions. We don't need strong growth. But we need enough to allow our companies to perform and pay our coupons.
Madelaine, we started the conversation talking about the AI build-out, and I appreciate, as you said, that's a little removed from what the companies that you invest in. But you did say this thing that I thought was really interesting. You said this is going to be something that will happen over generations. And is that the kind of mindset we need when we're thinking about the scale of the infrastructure build-out, the data center build-out that's ahead of us, that this is going to take generations to deliver?
It's a long-term shift in the economy, in the infrastructure. That's why partnering with Brookfield now, who are used to these long-term investment horizons, is so impactful for us. When we underwrite every single loan or bond that we underwrite, we do it with a view that we would hold it to maturity and we'd be happy with that. We don't, because we're actively rotating and managing our portfolio. But that keeps us out of a lot of trouble because we're thinking of the long-term horizon. And today's market, you have to think about what that shape of the economy, what the world would look like when we're going through a fundamental change like we are today.
OK, a generational change. Madelaine Jones, thank you very much indeed, portfolio manager at Oaktree Capital Management. Now, as the US weighs more trade measures, meanwhile, against Canada, leaders in the country are throwing their support behind a more aggressive stance towards Washington.
I think there's a broad understanding among Canadians and certainly among the British Columbians that I'm speaking to that there is going to be some pain here, but also an understanding that any agreement or deal that we might have signed with the president was maybe good for this week, but not much longer than that. A bully will always come back for more lunch money. And at some point, Canada had to say enough. And I'm glad the Prime Minister did.
That was David Eby, the Premier of British Columbia, speaking to Bloomberg. We'll have more on the escalating trade war between the US and Canada later in the programme. This is Bloomberg.
Welcome back to the opening trade this Wednesday morning. The futures picture looks flat to positive for European stocks. So the DAX maybe not getting the best of the gains, but maybe consumer-facing companies that might benefit from a lower oil price might do better. We are down by 2.2% once again on the oil price, Tom, with an 86 handle on Brent. And
we have breaking news on Nvidia Day, a redhead across the terminal. This focused on its major competitor over in China, which is Huawei, and its Ascend chips and the infrastructure that goes with it. This is news from Bloomberg reporting that Huawei has offered to build data centres and supply its Ascend, those are Huawei's cutting-edge chips, to Egypt. Egypt has put together a bidding process for this, and Huawei is part of that bid. It hasn't been accepted yet, but really fascinating that Huawei is looking, it would be for the first time, to get access to the African market in terms of shipping its cutting-edge AI chips into that market and building data centres. So we'll see how that evolves. Our reporting suggesting that the US is looking to put forward a counter-bid, no doubt involving Nvidia. And would there be penalties for countries that choose Huawei over the US? We will see. Let's talk about geopolitics and how it's playing out in the Middle East. Oil prices are falling for a third day, and gas futures are extending their decline as Iran and Oman push diplomatic efforts to resume shipping through the Strait of Hormuz. For more, let's bring in Bloomberg's Abir Abu Omar in Dubai. Talk us through the detail of what's new here then, Abir, because they're talking about, this is Iran and Oman, talking about an interim framework for Hormuz, but there doesn't seem to be an agreement just yet, but the market really wants to believe in this, it seems.
Yeah, and that's why probably you're seeing Brent crude prices falling for a third straight session. And you're right, we don't have a lot of details. What we know is that this is a framework that is temporary in its nature, and it's a mechanism to open the Strait of Hormuz or reopen the movement in the Strait of Hormuz in some fashion. Now, the two countries are set to have further negotiations over the next 30 to 60 days to carry out a more permanent solution to the Strait of Hormuz. But some things that stood out is, first, the fact that this is temporary. Second is that this is an initiative that will also discuss who manages the Strait of Hormuz. Now, of course, this is a clause that may draw some issues with the United States, with countries in the region. But what we know is that a joint statement by the two countries came out and suggested that they're looking at those mechanisms to start movement in the Strait of Hormuz. And one other very important clause was demining the Strait of Hormuz, something President Trump said had already happened. Of course, without providing evidence to that assertion. But now Iran and Oman are saying that demining the strait, the crucial waterway, will be part of this mechanism.
Abir, thank you very much. Bloomberg's Abir Abu Omar in Dubai. Let's turn to today's markets in 3 minutes on the opening trade with Bloomberg's executive editor for Asia Markets, Paul Dobson. Paul, good to have you with us. I mean, from a European perspective, we're wondering whether the weaker oil price might add to risk appetite a little bit. I wonder whether the recent developments around long bonds, do they add to risk appetite a little bit for stocks? If we are seeing a cap on long bonds for whatever reason, what's your assessment?
Yeah, morning, Anna. So partly that's helped by the oil price moves as well, of course. So decline in oil prices signals slightly slower inflation, and therefore that's good for the back end of the yield curve in particular. So Scott Bessent will be pleased with that, but I think he'll also be pleased if he passes the market metrics a little bit more carefully than looking at the outright yield numbers to see his efforts to calm things may be working. And so if you look at the swap spread, for example, which is the difference between interest rate swaps and Treasury yields, so the Treasury have been outperforming relative to the interest rate swaps and sort of making it a less negative difference. So that shows that there's some stronger appetite for bonds, relative to those swaps. Another thing is in the options market, where again you're seeing some signs that there's a bit of stabilization. We had a write-up of a report from Citadel, I think, as well, talking about how they flipped to more bullish on the long bonds, thinking about the positioning of momentum following traders. And so there are just a few signs that maybe there's a little bit of relief coming for the long bond. What I would say is I'm not sure that you need to be that worried about them in any case. The economy is bubbling along quite nicely. We're in a higher interest rate environment, and therefore you'd expect higher yields over time.
OK. Timing and the time frame is everything, isn't it? I mean, there do seem to be increasing voices, Paul, warning about the structural nature of the deficit and the inability, it seems, by both parties in the US to deal with that. And at some point that will need to be addressed.
It's true, and I think that Bessent is working on some plans. He's got a difficult juggling act. He wants to outgrow the debt load rather than necessarily putting in place too much austerity. So how exactly he's going to convince the market he's going to do that will be weighing on him and will be watched very carefully over the next couple of weeks. That has come back to the public's attention. One thing that's going to be fueling that growth is the AI build out and development, and I think that that's something that he'll be pointing to and will want to pay attention to as well in the coming days and weeks.
Yes, and from a big picture perspective then, Paul, what are we watching for? What are you watching for from the Nvidia numbers?
Yeah, happy end day, Anna. So I think there's a few things to watch out for. One, revenues, 2Q expectations around $92 billion, 3Q around, well, more than $100 billion. So watch how that performs relative to estimates. And the other number that people like to watch out for is the gross margin figure, 75% expected for 2Q. If it can come in above that, that will be important. And then how are they managing costs and how are they going to look into raising prices? We had some reporting that they're going to be pushing up prices. We know that memory chips are getting more expensive for them and everybody else as well. So those cost controls will matter too.
OK, Paul, excellent setup for one of the big macro events, of course, of the week. Bloomberg's executive editor for Asia Markets, Paul Dobson, thank you. Let's get your stocks to watch this Wednesday and bring Chloe Malley standing by. Chloe.
Good morning, Tom. Today we are looking at tech stocks, of course, ahead of those Nvidia earnings. Nvidia is a bellwether for this AI trade, and what it reports will be really telling us something about the sustainability of this AI spending. We've already seen in Asia some of those chip stocks moving higher in anticipation of some pretty good numbers from Nvidia, and we could see a very similar dynamic playing out here in Europe today, with all of those names up here on the board very much in focus, all of those chip stocks in Europe. It is also worth noting, if we flip the board, as one analyst put it, that the market is in a bit of a holding pattern at the moment, with those major results really in focus, and also what happens at Jackson Hole later this week. So this is the context within which we are looking at this AI trade today. Moving on to this never-ending M&A saga in Italian banking, with Banco BPM quite skeptical of the takeover offer from Monte dei Paschi. The original plan was for a so-called merger of equals between Banco BPM and Monte dei Paschi, but that has fallen apart, and instead Paschi has said that it wants to buy Banco BPM, but is encountering quite a bit of resistance there. So we'll be watching out for the impact there on those two Italian lenders that have been doing, as we can see here on the board, pretty well so far this year. And finally, let's turn over to the struggling car-making sector with Aston Martin in focus. Aston Martin is set to leave the FTSE 250 index. This would really confirm its status as a small-cap stock and raise a lot of questions around the ongoing turnaround for this company and whether it is working or not. Of course, it's been having a very tough year. We're down more than 45% year to date, and this departure from the index could be another big setback for the company. So that's also going to be one sector in focus this morning.
Chloe, thank you very much. Chloe Malley with some of those stocks in focus. And big picture, I guess we're watching anything to do with the oil price, gas prices as well, Tom. I can see that the gas price in Europe is down by 4%. The oil price has retreated once again, actually down by 2.2% now on Brent at 86, the handle, 86.66. So we'll watch that. It certainly won't benefit the oil majors listed in London and elsewhere, but we will certainly see if that provides any upside to consumer-facing businesses.
And whether it provides any upside to gilts as well. We've seen a bit of a bid now for sovereign debt over in Europe. So yields down between 1 to 2 basis points. We'll see if gilts that are, of course, sensitive to the inflation story react to lower oil prices, with Brent at $86 a barrel, as you say. And, of course, the linkages between the Nvidia story and the ecosystem in Europe, whether it's ASML, of course, the maker of the lithography machines that go into the foundries that produce the chips for Nvidia, what kind of story that tells for Europe and its tech hardware space, and to what extent there's a link there. It may be a tomorrow story, it may be a today story as well.
Yeah, it's going to be interesting to see how the results from Nvidia are received by markets, because it's not always entirely predictable how even if you get really good results, does that play really well for Nvidia? Does it play well for other companies instead, you know, and less well for the company itself? So we'll be watching that. We're going to be having a deep dive conversation in the second hour around Nvidia. Yep. And I know Clare Pleydell-Bouverie, long-term Nvidia bull, I think, and, you know, super fan even of Jensen Huang and everything they're doing there. So really interesting to see on what is that positivity built exactly.
Yes, I think that's a fair description of her. But her analysis,
I don't want to mischaracterise
her analysis. Is deep and thoughtful and very granular, and you can take issue with it. But the data, backs up, seems to back up a lot of her views on this, and particularly around the longevity of chips as an asset class, and to the fact that they're outliving a lot of the assumptions. So that's really interesting when we think about the capital structure that has been built around chips and the infrastructure story.
Yeah, we'll keep an eye on the European technology names running into that report from Nvidia. Coming up on the opening trade, then we'll bring you the market open. This is Bloomberg. Welcome back. This is the opening trade then. A few minutes until we get the start of cash equities trading here in Europe. This is the handover from the US, and I guess that's mildly positive for European stocks. The fact that after we closed up in Europe, as marked by the yellow line, we saw a little bit of a drift higher, perhaps on some fairly low volumes, it being August, but we've got that nonetheless as a bit of a handover into the European session. There are perhaps other reasons to be a little cheerful going into the European session. We have a weaker oil price. That doesn't play well necessarily for big oil companies listed in Europe, but it might play better for some of the consumer-facing companies. The basic resources story looks a little bit different this morning, but we are looking at the FTSE 100 futures then, at least up by 0.3%. Euro Stoxx 50 futures broadly a little bit positive then, Tom. So taking that lead from the US, adding in that weaker oil price that perhaps is a little bit supportive at the margin, and maybe asking if we're seeing a cap on long-end bonds. Maybe that's useful in terms of risk sentiment, but really we're just waiting for some big events, PCE and Nvidia. Yeah, the event risk is certainly there, but we will be watching those oil majors, of course, on lower oil prices. Travel and leisure could get a bit of a lift on softer energy prices as well. Of course, tech is in focus. Nvidia earnings dropping later today. The software story is interesting as well. There's a little bit of softness coming through from the likes of Intuit and Zoom overnight stateside. It's possibly a read across to some of the European counterparts. SAP in focus, a downgrade for that company from one of the analysts. Sportswear in focus as well. There were some decent numbers coming through from Anta over in Hong Kong. We'll see if some of the European names get a lift on the back of that. And Zabka, this is a Warsaw listed retailer, aligned there about a potential takeover bid by Canada's Alimentation Couche-Tard. So we're watching that as well. Zabka in focus over in Poland. Anna. OK, so a few sectors and companies to keep an eye on, but broadly we are going to be waiting for the big events of the day. That is PCE data out of the United States, Nvidia earnings after hours, also earnings actually from some of the other tech names that maybe are on the slightly more vulnerable side when it comes to the AI rollout. Let's have a look at where we are on these European equity markets then as they open up. And the FTSE 100 is the first out of the gates, down by 0.1%. The Stoxx 600 broadly flat. Perhaps we're not going to see a huge amount of movement ahead of those big events, the PCE data indeed, and the Nvidia numbers, perhaps even more importantly. So perhaps the market or investors reluctant maybe to make any big bets with those things in mind. The CAC 40, though, getting a bit of a bid, as is the IBEX over in Spain. So we're up by 0.3% in those markets. Perhaps some of the more consumer-facing names in focus there. So that's the broad early look, Tom, at what we're seeing here. We don't have the DAX open, but that's pretty standard for this time of day. So what do you see?
In the first few seconds, most sectors are in positive territory. Not a surprise that energy is down 0.9% as a sector. Tech, interestingly, a little softer, just by 0.2%. Just 4 sectors so far in negative territory. Top of the list, I was flagging this, travel and leisure gaining 0.7%. That will be the gains coming through from weaker oil prices. So travel and leisure as a sector getting a bid on that story. Basic resources a little stronger as well. That sector up 0.7, and the consumer up 0.6%. Banking also faring relatively well. Gains there of 0.5%. The biggest losses then for the energy sector, down around 1% right now, Anna.
Yes, indeed. So in terms of the balance of things, we are broadly stronger, aren't we? The FTSE 100 is pretty flat. As you've been saying, the energy name's under pressure, so maybe that's no surprise. So we're not getting outperformance there. But we are seeing some outperformance then coming through in the French market. So that's something to consider. Just looking at the consumer products, yes, and we are seeing a bit of a bid into luxury, just up 1%, but that stands out as beating the market at least today. We're up by over 1% on LVMH, on Kering, on Hermes. So maybe there's something to that. Let us broaden our focus and talk about where we are on these global markets with Wei Li, Global Chief Investment Strategist over at Blackrock. Really nice to see you this morning. Thanks for being with us. So let's start by thinking about your broad perspective on stocks right now. We've come through a couple of weeks where we've been questioning whether higher yields are going to ruin the party, if you like, for stocks. And maybe we have our answer, maybe we don't. It's a low volume kind of August at the moment. But how are you thinking about global stocks at this point?
Well, we're still overweight stocks at the moment. Yes, rates have been repricing. Cash path has been repricing, term premium has been repricing too, but in our view, stocks can do well still in the face of higher rates, because rates just affect the discount rate with which we discount future cash flow, but growth matters a lot as well, and earnings have been very strong for stocks. If you look at S&P 500, we're now below 20 times because of the strength in earnings momentum. So that being the case, it is possible for stocks and at least selective parts of stock markets to outrun the higher rate environment, which is why we're still risk on.
OK, and that takes us to the Nvidia earnings, which are coming out later on today. And what do you look for from companies such as Nvidia, such an important part of the well, we heard them described yesterday as the central banking of the AI trade, by one of our colleagues yesterday. Such a linchpin of the AI trade. What kind of mood music are you listening for when it comes to Nvidia?
I like how you described Nvidia earnings earlier as the macro event of the week, because micro is now macro. That's how big this AI company spending has gotten to. So one thing that we're paying attention to is CapEx kind of trajectory. I'm not just talking about Nvidia. I'm talking about the whole AI complex. Already beginning of the year, it was record level, and it has been revised higher. And higher CapEx also means competition for capital is intensifying, and that pushes rates higher as well. We're in a higher rate environment, but on the flip side of that, durable income becomes a more important theme for portfolio, which we're very excited about. But back to equities, Mag 7, we just talked about the S&P 500 trading at below 20 times. Mag 7 forward PE is just above 23 times, which is close to a 3-year low at the moment, mostly because of there has been a bit of consolidation, rotation, but also strength of earnings. So within the broader AI ecosystem, there is a sub-theme, which is scarcity sellers are doing quite a bit better than scarcity buyers, and Nvidia is scarcity seller. You look at some of the price increase that we have been talking about, it really does show that they have earnings pricing power, earnings momentum, and that's something that we are very excited about.
Oh, that's really interesting. So you see that as a pricing power story for Nvidia, not a concern about margin squeeze on higher memory. You're more, the read you take from that is they have pricing power. They can do this and do it comfortably.
Well, there is the whole AI ecosystem, and pricing dynamics very much kind of shifts where revenue is accruing. So there is pricing power. Memory prices are also going higher, and I would also think of memory providers as scarcity sellers too. So if you think about them as kind of players within the whole ecosystem, sellers better than buyers in this particular case, and then models have a role to play within the overall ecosystem as well, because we talked about how valuations look attractive, but earnings durability very much at this point divides AI bulls from AI bears. And as we think about kind of the commoditization risk from China, it impacts models, and specifically we just talked about some of the pricing dynamics. It's happening within model providers too. You look at the leading model labs in the US, OpenAI, for example, you see that the less advanced models are more kind of facing the pressure of commoditization, whereas the very leading edge models, they still command pricing power. And that is important, which is why they're throwing everything at it to try to lead in the frontier race, right? So the bottom line is we're still positive, the AI trade, because momentum is very strong, CapEx is strong, your CapEx is my revenue, so things are going up. But we're paying attention to model development to understand the progress of technology. We're paying attention to GPU rental prices to understand demand. We're also paying attention to incremental margin in particular to understand monetization trends.
It's really interesting. I mean, you're talking about the model development, so it makes me think of obviously a number of different things. The role that open source is playing in terms of the earnings story, maybe, and whether you see that as one of the catalysts around your conviction that earnings remain strong. But I'm also thinking, of course, of Anthropic's upcoming IPO, expected IPO, and the market reaction to that. You're comfortable that you can get an Anthropic or one of these frontier models, let's say, listing, and that the market will take that and can continue through that it's not going to absorb so much liquidity, it becomes a challenge?
Well, liquidity is a big consideration as we think about market sentiment and mood music in the second half of the year. And it's not just liquidity drain from record IPO, it's also liquidity from credit issuance. It's also liquidity from government bonds issuance. Everybody is in need of more capital, right? This competition for capital is intensifying. So liquidity consideration is a potential risk for markets as we think about potential kind of pockets of indigestion as we head into the second half of the year. But that is more technical in nature, and if the fundamentals are strong, it doesn't change our kind of broader conviction in AI. Whilst as we talk about the intensifying competition for capital, again, it goes to, and it really kind of leads to high rates for longer. And this, again, is why durable income is so exciting for portfolio right now. And it's not just bonds that provide income for portfolio, you know, infrastructure, private credit income, and also some option type of equity strategies could provide income. So, you know, as we think about this world of polyfocated outcome, many possibilities on the table, all quite likely because we genuinely do not know, right? Like this big mega forces driving where we're heading towards. We don't have a base case anymore, so macro anchors are becoming weaker, but income anchor becoming more important in portfolios.
Okay, yes, this higher yield environment then, the opportunity of that as income is really interesting. So we talked to a guest earlier on in the programme from Oaktree, Weili, and we were talking about whether, well, she said that this is a multi-generational build-out. So this is the time horizon we have to think about when it comes to the infrastructure rollout for AI, is it? And is it possible to have sort of investment horizons that really reflect that?
Well, yes, some of our institutional clients do have the luxury of longer-term investment horizon, but the reality is markets are mark to market on a daily basis, right? So there is a bit of a consideration on both sides, but this bridging of kind of when you spend versus when you can reap the benefit, this is actually key. This is why in our outlook we have a key theme of leveraging up, because there is a time disconnect between how much spend that needs to happen now in order for productivity boost to come in later down the line. If history is anything to go by, it takes a long time.
It takes a long time. And it's worth the leveraging. So who needs to leverage up then, Weili? Who is it advisable to leverage up? Who should be thinking about more leverage at this point?
Well, a private sector hasn't really been leveraging up for a long time. You know, if you look at the periods coming out of the global financial crisis, it's the governments that have been leveraging up in terms of debt to GDP ratio versus pre-global financial crisis, debt to GDP ratio in the U.S. has now almost doubled, right? But the non-financial corporate part of the U.S. economy actually has been going sideways, and consumers has not been leveraging up as well. So there is room for leveraging up, and because now corporates need financing to bridge towards when their investment
so
can
if we see gearing rates go higher, that's not a negative then? That's just investing into this exciting new technology that delivers in the future?
It depends on the return,
Yeah.
and the jury is still out. Only time will tell. But the starting point is quite healthy. As I said, like right now, the level of indebtedness for private sector in the U.S. compared to the levels that we saw kind of, during dot-com bubble, this is very healthy. So a bit of incremental leveraging up is promising until we get to a point where, we're talking about downgrade risk for these large companies. Right now, leveraging up is just a feature of the environment.
I have to ask you, as we're talking about structurally higher inflation, structurally higher rates for all the reasons you've outlined, whether you believe in the Bessent put when it comes to the long end. Do you take that seriously?
Well, I think it says a lot about intent. They really do care about the long end. But the long end is also driven by many, many factors. There is kind of the policy rate path, and then there is the term premium. Right now, U.S. term premium is 80 basis points. It has come a long way from almost negative 1% less than 5 years ago. So term premium has repriced quite a lot already, but there is room for further repricing because of where inflation is heading towards, because of where fiscal spending is heading towards, and also because of the global dynamics. If you think about incentives for international players to hold treasuries, so all of that would likely push term premium higher, and there is global dynamics going beyond what the U.S. Government can do. But you can clearly tell the intent from recent policies.
Weili, thank you very much indeed. Always fascinating. Blackrock Global Chief Investment Strategist. Let's check in on the Core 6 right now before we get your stocks to watch. So the Core 6 in focus, of course. Let's bring them up. ASML is currently down 1%. So a little bit of softness then for that key technology provider in Europe. Schneider Electric gaining just 0.2%. It's a slightly brighter picture over in the healthcare space with Novo Nordisk up 2.3%. LVMH Luxury was under pressure. It was one of the biggest losers across the sectors yesterday. Today, a turnaround. LVMH currently at 1%. Nestle in the consumer staple space just up 0.5%. Let's get your individual stocks on the move and get some more clarity and colour with Chloe Mellet standing by. Chloe.
Good morning, Tom. We are seeing a bit of weakness in that software sector in Europe on read across from the US. So we had Interim and Zoom Communications having quite disappointing results, and we are seeing that impacting those software stocks here today. We've got SAP and Sage Group down. Another thing that's weighing on SAP today is that it did also get downgraded by UBS. So not a great picture there, but it's not all bad across the entire software sector. We've got the IT services company Software One that is actually up this morning quite strongly. We're up more than 11% after some strong first half results. Moving on to Hochschild Mining, which is a gold miner that is also in the green this morning. We're up about 6% after it boosted its forecast. So quite strong move there. On the other hand, oil majors are having a bit of a tougher day this morning as Iran and Oman discussed a framework for resuming traffic through the Strait of Hormuz. That is weighing down some of those stocks this morning, with BP and Equinor in particular down in the red this morning. And finally, let's go to Ambu, which is a healthcare equipment maker, and it has had quite disappointing results. And then after that was also downgraded by Nordea analysts on the back of those earnings. And so we are seeing that really drag down the shares this morning. We're down more than 17% for this company.
Chloe, thank you. Chloe Mellet finding her best to find some of the interesting stocks on the move this morning. Coming up and on the programme, we'll take a dip into the Bitcoin story because Bitcoin does appear to be back, why optimism is returning to the beaten down crypto market, and where it goes from here. We'll discuss this. Is right back.
welcome back to the Opening Trade. Happy Wednesday. We are 18, almost 19 minutes into today's session. A bit of sideways trading, it seems. The European Stocks 600 currently up just 0.1%, ahead of some big risk event stories, of course. PCE inflation data out later. Then on the corporate front is Nvidia. And then, of course, you have Kevin Walsh on Friday. US futures currently a little softer on the Nasdaq 100, down 0.1%. But you can see a slightly brighter picture when it comes to France. The CAC current is currently up 0.4%. Here in the UK, the FTSE 100 is flatlining, 10,882. You've got basic resources gaining as a sector. On the downside, it's energy on weaker oil prices.
Yes, the mining sector doing well, as you say. Let's talk mining of a different sort. Bitcoin has surged about 25% just over the past week. The blistering rally pushed the most popular crypto coin briefly above $80,000 for the first time since May. Renewed chatter about the debasement trade has brought Bitcoin back into favour after Scott Bessent's bond buying plan sparked a wave of dollar selling. So let's get some analysis now and speak to Bloomberg senior crypto editor Ryan Weeks. Very nice to have you with us, Ryan, on the programme. So give us your take on what it is that has been driving Bitcoin higher. Is it all about dollar debasement, about finding alternatives to the US dollar, and in steps crypto? What's the driving force?
Well, I think there are two big drivers. One is certainly that Bessent's intervention in the bond market revived talk of Bitcoin's anti-inflationary properties, which haven't always held true, but it was thought to have created the right macro backdrop for a rally. There hasn't been a decent rally in Bitcoin for some time. It's been stuck in the doldrums around 60 to 70K for a really long time since a big sell-off last year. Over the past week or so, it's made it back to above $80,000, and that seemed to be quite significant. I think it was its largest percentage gain last week for something like 3 years, which is quite significant. So that was certainly one big reason for the rally. The other was more regulatory in nature. So the Clarity Act, which is seen to be a very important bit of legislation in the US for cryptocurrencies, has stalled. But there was a meeting between Donald Trump and industry executives last week at which he gave an endorsement to the sector, called on lawmakers to get that done, and also signaled that certain types of crypto instruments would be brought to the US, or that the CFTC is trying to do that. And so that was seen as positive as well.
Does that regulatory story mean that the gains that we've seen are maybe a little bit more sustainable? Does this? What is the likelihood? What is the industry saying about whether or not this can be sustained?
Well, the industry certainly thinks it can be, perhaps unsurprisingly. We've seen bullish forecasts coming out again, people suggesting we might have a new record by the end of the year. I'm not sure about that just yet, but certainly the inflows into the big Bitcoin exchange-traded funds in the US would suggest that this is a more meaningful rally than we've had recently. And I suppose, the amazing thing to bear in mind is that the regulatory backdrop for crypto has hardly ever been better than in the US right now. And yet, for the first half of the year, cryptocurrencies, most of them were languishing at lows not seen for a while. And so, whether or not there are regulatory advances sort of meaningful enough to really push Bitcoin further up, I think that remains to be seen.
Ryan, how should we think about the alternative nature of these currencies? Because I was struck listening to Scott Bessent at the beginning of this week talking about trying to limit the resources that Iran has at its disposal, and he cited digital assets as one of those areas. And I'd been wondering whether Iran was going to have to pivot more into this kind of space if they're cut out of the dollar trading system. But maybe crypto, with the regulatory push that you mentioned, is increasingly attached to the dollar-based system. How can we think about the alternative nature of crypto?
Well, to some degree, that's right. I mean, the way to think about it is to look at Tether, or USDT, which is the world's biggest stablecoin, which at one point, not so long ago, was, not particularly welcome in the US, and now has become, Tether itself, the issuer of that stablecoin, has become a kind of an ally to the administration. And, they're constantly touting the work that they do with regulators to help to freeze assets. And they were involved. There was a large USDT seizure that essentially involved the US freezing funds that were being used by the Iranian central bank last year. So, to some degree, that kind of anarchist past where, it was all about not being, within the purview of the state for cryptocurrencies, that's sort of no longer the case to some degree. OK, really interesting breakdown of what we're seeing across the crypto space, with that focus, of course, on Bitcoin. Bloomberg senior crypto editor Ryan Weeks. Ryan, thank you.
So, from Bitcoin to the more traditional part of the financing system, the banking space in Italy. In the latest news from Italy's bank acquisition saga, Banco BPM has indicated scepticism towards the takeover after offer received from rival banker Monte dei Paschi. The lenders board acknowledged the unsolicited offer, but said that the bid, quote, does not recognise a premium for its shareholders. Let's get more from Tommaso Ebhardt, Bloomberg's Southern Europe managing editor in Milan. Tommaso, explain Banco BPM's reasoning here. They're just trying to drive up the offer.
Sì, buongiorno from Milano. We are going from bitcoins to the world oldest bank, Banca Monte dei Paschi di Siena. Banco BPM essentially indicated that the offer is not enough and also that was unsolicited. Banco BPM and Monte dei Paschi had discussed for months, if not years, about the combination. Banco BPM last month said, okay, we are not going to ahead with the combination. We can't find, the right path together. And then Banco Monte dei Paschi arrived with an unsolicited bid. So it looks like Banco BPM doesn't seem very happy about this kind of a bid. It's very difficult to understand if this is a tactical response. It's just their initial response. They're going to evaluate the bid deeply. Obviously, at the end of the day, more than what the board thinks, it will depend on what investors think about Banca Monte dei Paschi offer. And the big question mark is how the French will behave. Crédit Agricole owns about 1/3, 30% of the bank. So if you want to know how it's going to end, maybe we need to find some answers in Paris.
Yes, I seem to remember we asked the CFO of Crédit Agricole about that, and certainly said that she was certainly saying they have a seat at that table. So where on earth does this saga go next then, Tommaso? Everybody in Italian banking seems to be out to buy everybody else. So what do we expect to happen from here?
We have been waiting for a decade for consolidation. Here it is coming. So what's next? One important thing that happened last night, too, is also that the Italian government somehow indicated that it's not going to sell its remaining stake in Monte dei Paschi di Siena at the moment, not to take part in this fight around the Siena bank. So what's next? For sure, we have to see if Intesa Sanpaolo, Italy's biggest bank with Unicredit, which made a bid for Banca Monte dei Paschi di Siena, will react to Siena Defense double twin bids for Banca Popolare di Milano and for Banca Generali. But more importantly and closely, Generali hasn't said a word. Generali owns 50% of the other target, Banca Generali. People familiar with the matter has somehow told us that they are not opposing in principle a deal including Banca Generali, but they haven't said anything. Okay. So in the next couple of days, we expect a response from Generali.
Tommaso, thank you so much for joining us once again. Tommaso Ebhardt in Milan for us. Coming up on the programme, we'll get back to the Nvidia earnings. We'll discuss what to expect with Liontrust Global Technology Fund co-manager Clare Pleydell-Bouverie. That's next. This is Bloomberg. Wednesday morning, everybody. The opening trade, 30 minutes into that opening trade here in Europe. And the session here in Europe is a little more negative, maybe, than we'd anticipated. And we are seeing a bit of a boost to some of the consumer-facing stocks as a result of a weaker oil price. That is lifting what we're seeing over in France. The CAC 40 up by around 0.5%. But elsewhere, maybe it's the drag from energy names that outweighs that upbeat consumer impulse from a lower oil price. And so as a result, some of the energy names weighing down things like the FTSE 100. The Xetra DAX also down by around 0.1% or 2%. And so, Tom, net, we are flat on this European equity market. But we wait for some big set-piece events, Nvidia earnings and PCE data out of the US.
Once again, volumes are a little light, down about 20% versus that 20-day average. Majority of stocks, though, are in positive territory, just about there, 331 versus 245 that are losing right now. Let's flip the board and have a look at the leaders, though, and some of the individual stories that we can pass. Software One is one of those stories and one of those stocks that is gaining today and gaining pretty strongly, as you can see. That's an earnings beat, so up close to 12% on the back of that. Hochschild Mining, this is also a more positive forecast coming through, particularly around the gold price, and so Hochschild is gaining up 36 points, up almost 6%. Ørsted, this is a positive story as well in the renewables space, gaining 1.4%. Ørsted is getting an upgrade to buy by Citi for that renewable and turbine maker. On the downside, SAP, so that's taking a hit. The software giant, of course, listed over in Germany, over in Frankfurt, down 3.7%. Possibly a bit of recross. There was a downgrade coming through and downgrades coming through in terms of the outlook for Intuit and Zoom, and so a bit of negativity in that space for some of their counterparts. BP on the oil price, as Anna was saying, down 2.5% as oil prices drop on some optimism that maybe there are movements towards coming to some kind of resolution around a framework deal in the Strait of Hormuz. And Ambu, this is in the healthcare space, plummeting almost 20%, down 17%. That stock, there's a downgrade from Nordea really hitting that stock so far in the session. Anna.
Let's get an update then on one of the stories that's moving the oil price this morning and some of the other news flow that's in focus for us, Tom. Oil is falling for a third day as Iran and Oman look to push diplomatic efforts to resume shipping through the Strait of Hormuz. According to Oman's news agency, leaders from the two countries have discussed what's called an interim framework that seeks to establish a temporary joint maritime corridor. And a plan for mine clearance is also part of the conversations to restore safe navigation through the area. The Trump administration is discussing additional trade measures against Canada. This after Canadian Prime Minister Mark Carney unveiled dollar-for-dollar retaliation to new tariffs imposed by the US and announced new support programs for Canadian businesses hurt by the escalating trade war. Nvidia will deliver its quarterly earnings report today after the bell, updating investors on the state of the AI industry's massive data center expansion and the company's efforts to remain at the center of that AI build-out frenzy. Analysts estimate that the tech giant's revenue nearly doubled from a year earlier to $92 billion last quarter, more than any of its rivals generate in a full year. Tom.
Let's get analysis on that story then, as we build up to that massive event, of course, for the markets, the macro event that is now the Nvidia earnings story, and bring in Clare Pleydell-Bouverie, Global Technology Fund co-manager at Liontrust. Claire, always great to get your insights on the Nvidia story. There is a view out there amongst some that Nvidia is maturing, that this story is maturing, that there is increased competition, that the ROI story has not been properly answered, that the fact that Nvidia is playing, as one of our colleagues described, the central bank role around funding a lot in the ecosystem is exposing it to additional risks. You push back on that narrative. Why? What is the transformation that you're seeing at Nvidia that suggests this is not a company that is coming to the end of this cycle?
Morning, Tom. Great question. Really, four things have changed for us with Nvidia from the start of this year, and they really transform actually how we analyse this company. First of all, compute is becoming an asset class, and the fact that Nvidia's stock still trades where it did before the announcement of the $500 billion consortium from the world's largest credit investors that really validate compute as collateral, GPU as this asset class, is very puzzling to us. We see potential for up to $500 billion of revenues as this consortium gets deployed. Secondly, we think the ROI question was firmly answered in Q2 earnings season. We saw very significant cloud revenue acceleration from all three of the major hyperscalers. GCP 82%, Azure 37%, and AWS the fastest growth in 8 straight quarters. Thirdly, open source has had its catalyst in Kimi K3. Now, all the market attention has been on China leading this race, but
and that's a Chinese model.
Precisely,
an open weight model. Yeah.
But the Western leader in open source models is, in fact, Nvidia. Nematron 3 Ultra is the most intelligent open source model in the West, and that is Nvidia's model. And then finally, and this is a point we think is not very well understood, every single one of the world's largest inference players, including all hyperscalers, now Apple, and massive new customers in, we've got Elon Musk with SpaceX, are all now increasing their proportion of their capex towards Nvidia. And this is in spite of custom ASICs growth. So these are the 4 factors that we feel give us confidence that Nvidia is actually accelerating. And we did see an acceleration in fundamentals at the turn of this year. We see that continuing through into next year.
And can I ask you then, in that context, and then you're saying you were seeing a lot more capex to Nvidia, and I wonder how we think about the capex that Nvidia will see in the context of how long GPUs last. Because when we initially started talking about the rollout of Nvidia GPUs, the data center build out, we asked over what period will we need to think about the lifespan of these GPUs. It gets longer. Is that bad or is that good for Nvidia? Because if it gets longer, if they prove to be more useful, I mean, does that mean they don't sell as many of the new ones, or that's not the story that matters?
It's good news for Nvidia, and they're certainly a lot longer. They're proving longer by a factor of 2 to 3-fold versus a lot of critics and initial assumptions. You know, I was in China just a couple of months ago, and I saw with my own eyes A100 servers, which is Nvidia's 2020 silicon Ampere, being sold out and being sold out at a premium. We heard the same from Alibaba's on their conference call last week. Volta, which is 2018 silicon, is still being fully deployed. The reason this is possible is because of software optimizations. Nvidia improves its fleet every single year, so the chip you bought last year gets faster this year. So
that just explain, that's because they upgrade the software that is layered on top of those chips, and you can get more performance out of even older chip with improved software.
Absolutely. So if we take a Blackwell server, a GB300 server, just purely through software optimizations in 6 months, Nvidia managed to increase throughput by 2.7x and decrease the cost per token by 60%. And so this is the CUDA moat, this is the Dynamo moat, which is another software offering we think is distinct from CUDA that Nvidia has to its advantage. But back to your question, Anna, on why this is good for Nvidia, is that this is what enables GPUs and compute to become a financeable asset class. Because if I'm one of the world's largest credit investors, what I'm looking for if I'm going to put compute as my collateral is an asset that's got residual value.
Yes.
And this is why having the best technology wins. You know, we're moving into the stage of the AI infrastructure cycle where the first stage was really funded by cash flow from operations, primarily from the hyperscalers. Now, the capital markets are taking over. Debt is going to take a much more significant role in this. And so having the best technology really, really matters.
Can I just push on Anna's point about why you'd buy a Vera Rubin if you can extract more value out of an older chipset, particularly as CFOs and CTOs are becoming increasingly cost conscious on the cost of compute?
So you buy today's latest and greatest for training your frontier model. And being on the frontier really matters.
Are you moving from training to inference?
And then you use your N-1 architecture for inference.
Okay.
This is why you buy both. And this is why every single hyperscaler, every single one of the world's largest inference players have all put in their purchase orders for Vera Rubin. And the reason for that is that if you are still wanting to be on that frontier, on that Pareto curve, you have got to keep on buying the best compute, because you then can't charge your premium. We're seeing open source models commoditize the low end, and the open source models are going to take the vast majority of volume in that model layer. But if you're on that frontier curve, then you can charge up to $100 million per megawatt per hour versus 30 if you're below it.
Yes. Claire, in terms of the cost base that Nvidia faces, why do they seem as vulnerable as everybody else to higher memory prices? Or maybe they're not. Maybe they're doing deals that are better than others, but they're certainly facing higher memory costs and having to put up prices to customers as a result.
So Nvidia's got supply chain leverage, and this is one of the reasons they're in a very strong position given the insane increases in memory prices. So they can put up
prices to their to their customers, but they still have to face those higher prices in the first place, didn't they?
They have to face the higher prices, but they will get a volume discount just because they are purchasing in such significant quantities. If we think about the scarcest inputs right now to the AI build-out, memory is probably number one. TSMC advanced packaging, CoWoS is shortly behind. You've also got substrates, MCLL, all these sort of critical components are in shortage. Optics, really stretching throughout the decade, and Nvidia's locked out between 2/3 and 3/4 of the supply chain. And this is why we really focus on the purchase commitments every single quarter, 145 billion last quarter, which is up from 30 billion just 9 months ago. So that really indicates to you just how much supply chain leverage this company does have and how it is going to be increasingly difficult for competition, no matter how competitive their chip architectures, to actually purchase all those.
Claire, thank you very much indeed, outlining in detail the bull case for Nvidia. Claire Pleydell-Bouverie, ahead of those earnings, of course, Global Technology Fund co-manager at Liontrust. Meanwhile, on the competition side, OpenAI says its new in-house chip outperformed Nvidia's current flagship processor in key tests, measuring efficiency and response speed. Speaking exclusively to Bloomberg's OpenAI's Vice President of Hardware, Richard Ho, said the goal is to deliver more intelligence to users at lower costs.
The benchmarks that we did were with an open source kind of benchmark called Inference X. And we did that because it was a fair, kind of neutral benchmarking method. What we're seeing with Jalapeno is that we're able to get both high throughput and low latency with the same device, which is a kind of a first in the industry. And why does this matter is because high throughput means that you can serve a lot of customers with a lot of tokens much cheaper than you could if you otherwise. Low latency gives you very fast response times. And so, the agents will come back faster, you can do, more coding quicker, and that really, I think, is a real benefit for our products.
This is it. This is Jalapeno. You very graciously allowed me to get my hands on it. And again, the whole emphasis is on throughput and ultra-low latency. This is an inference chip.
It is.
So very simply, why focus on inference, not on the training side with your custom silicon program?
Well, I think that if you look at it, right, OpenAI has this enormous need of compute. And where that growth of compute is really on the inference side. We need a lot of training, and we have a really strong partner in Nvidia who has, really got a great training chip. So we focused on where we thought we needed to increase the amount of compute that OpenAI has available. With the growth in our users, with our weekly active users growing very, very fast, we saw the need to continue to have a wide range of inference products, and this is going to be part of our fleet, along with our existing partners who are providing us other chips.
How do you decide which workload goes to Jalapeno versus Nvidia or Cerebras, for example? You have options, but how do you make that decision?
It's a great question, right? I think with this optionality that we're now creating for the company, I think that we will be able to provide users with a range of models that have different cost benefits and different latency capabilities. We will map that ourselves. We will map out which product, which SKU, which chip is best for which one of these models. But the whole goal of this is to deliver more intelligence to our users at a lower inference cost, at a lower infrastructure cost. And that's what this is part of, that entire strategy that we've been working on for a while now, right?
Lots of people struggle with the benchmarks. To the layperson, it's difficult to decipher. So in very simple terms, on a dollar per token basis, how does Jalapeno stack up against the other options that are out there? How has this changed the economics for you?
It should drop it. It's a really good chip. It should drop it by a lot. The performance per watt that we're seeing, which is a good proxy for how much token will cost, is somewhere in the region between 1.8 to 4x better than other existing chips right now. And so we should see that ultimately when this rolls out into production, customer token prices should come down. That's a big drive that we've had at OpenAI for a little while now. And this really is part of that strategy.
Keeping things competitive then, perhaps. Richard Ho, OpenAI's Vice President of Hardware, speaking exclusively with Bloomberg tech anchor Ed Ludlow. Coming up on the programme then, we'll get back to the trade narrative. It's tit for tat between the US and Canada in their trade war, as the Trump administration is currently weighing further action against Ottawa. That story next. This is Bloomberg.
I told the Prime Minister, no deal is better than a bad deal. And we have to go tariff for tariff and dollar for dollar. And it's unfortunate. We had an attack from President Trump on our sovereignty, on our country, on the economy, that we're so integrated. Both countries were both each other's #1 customer, and it just doesn't make sense to attack each other.
Ontario Premier Doug Ford speaking to Bloomberg just yesterday. He's been quite animated in some of the language he's used about the Trump administration, and the Trump administration has used some colourful language back. President Trump and his team weighing additional trade measures against Canada, it seems, following those retaliatory counter tariffs announced by Prime Minister Mark Carney. Very much tit for tat now. Brendan Murray joins us, who leads Bloomberg's global trade coverage. Where on earth have we got to on this then, Brendan? So tit for tat coming very quickly, day after day. Our latest reporting then suggesting that the US is readying even further tariffs, maybe higher rates or a wider range of product.
Yeah, exactly. The list that Canada released was pretty much as expected. They raised the steel and aluminum counter tariff that was already in place from 25 to 50. They hit agriculture, they hit furniture, they hit electronics, they hit seafood. They hit some industries that will really stir up some unrest in states where Republicans really want to hold seats or gain seats in the midterm election. So Canada was very targeted with their response, and we've got 2 weeks until they take effect. So there is still time for the two sides to get together and postpone these tariffs. And it sounds like the rhetoric is cooling off a bit.
Okay. Right.
In the interview with Doug Ford, he sounded a little less, personal against President Trump, and so it sounds like we're headed toward some sort of negotiation back to the table.
I'm glad you say that, Brendan, because when President Trump posted yesterday about renaming Lake Ontario Lake America, it didn't feel like the rhetoric was dying down. But that's
a lot can change in 12 hours.
Yes, it does change quickly.
But if they don't find an off-ramp, then we're looking at further escalation and further economic damage for both countries.
Yeah, exactly. President Trump has already said that come January 1st, we're going to raise tariffs even further. But January 1st is a long time, and you would think that President Trump, who has sort of a knee-jerk reaction in a lot of instances, would have done that sooner. And so I think that was a signal that he wants some sort of time to figure things out. At the end of the day, the U.S. and Canada don't really want to get into a full-blown trade war. Let's remember, this is only $20 billion worth of goods that go back and forth. It's a small fraction of the overall trade. So it's a trade war, but it's small arms fire at the moment. It's not a full-blown economic disruption yet.
That is interesting. Yes, I was interested that the couple of banks in Canada were saying, manageable seemed to be the word that they were using to describe
manageable
this.
now. Well, we'll see if that tone down in rhetoric is translated into concrete talks between the two sides. Brendan, thank you for framing it for us so brilliantly as ever in terms of that trade dispute. Bloomberg's Brendan Murray, who covers all things trade for Bloomberg. Let's look ahead at what else we are watching throughout the day. 11 a.m. UK time, the ECB's Cipollone will be speaking at the Bundesbank event in Frankfurt. We've been hearing from Isabel Schnabel calling and making the case for higher rates from the ECB. At 1:30 p.m. UK time, the focus switches to the US with core PCE, of course, important for the Fed as we think about how they respond to inflation pressures. At 4:45 p.m. UK time, we'll be hearing from the Fed's Parton. We'll be speaking and we'll get those lines for you. And, of course, on the earnings front, it is the big ticket number. It's Nvidia reporting earnings, but also Okta, CrowdStrike, and Salesforce may be interesting, and HP. Those all report after market.
Yeah, so we get Nvidia, obviously beneficiary of the AI rollout, but then we also get those reports from some companies that maybe have been a bit vulnerable to talk about AI and what it can do to software. Skylar Montgomery-Koenig joins us from our Markets Live team to round out the hour and think about where we go from here. Skylar, good morning to you. So we are heading towards the Nvidia earnings. We've been asking a lot of people from a lot of different perspectives, what's in it for them? What are you watching out for them when it comes to Nvidia?
Yeah, I mean, I think the general kind of bellwether we use for Nvidia is it's the biggest AI company. So what does it say about demand? How does that feed into the market more broadly? What I will say is that it looks like a relatively positive backdrop heading in terms of we had this massive positioning reset in July where you had speculative positioning unwinds, you had retail investors come off, and there was still clearly concern in August, as in you've not had this strong rebound, but maybe that's a healthier backdrop. In terms of NASDAQ positioning as well, was quite short mid-August, and that's coming off as well. So I think that's a more positive sign. The other thing I'll point to is the earnings we've had so far from AI companies have been strong demand. And so we kind of get this last check or this big check at the end of the earnings season to say, where can we go from here? But given that positioning is in a healthier place, given the earnings we've already had, potentially this can be a positive catalyst, especially because more recently, I think yesterday rather, Nvidia rallied, but the 7 days prior to that, it sold off. So maybe there was some front running of the downside you typically get on the earnings release.
How binary do you think the reaction function of the markets will be to the inflation print, the PCE print out of the US later today?
I think it's very asymmetrically skewed hawkish. And I say that because all of the data so far in the last couple of months have skewed in the dovish direction. So you've had non-farm payrolls, you've had 2 CPI prints that have been softer, and that's had pricing come off for hikes, but it's been sticky at around 1 hike this year, either at the end of this year or beginning of next year. And I think that's sticky because of the level of inflation, as well as this idea that Fed credibility is under pressure post the last FOMC, and that pressure has just gotten bigger by the buyback program announced by Bessent. So if we get this core PCE print and it's a bit softer, I think it's hard to take out more pricing. Whereas if we get a hotter number, you can certainly put more in heading into worse on Friday. And particularly because the expectation for core PCE is 3.3%. That's very high relative to target, and it's flat from last month. And that's what the Fed targets, and it's been stickier than a CPI.
OK, just briefly, Skylar, if that's possible. The long end outperforming the rest of the world a little bit. We're outperforming swaps a bit. Do we read a lot into that? Is that a sign of Bessent being effective at controlling the long end?
It's an interesting one because we have seen relative divergence based off of how fiscally irresponsible countries have been. So France has been under a lot of pressure. The U.S. has been under pressure, but the U.S. hasn't been as under pressure as you would expect given the deficits, the largest in G10 for 2026 and 2027 as a percent of GDP, that budget balance. And so I think there is this kind of reserve asset benefit the U.S. is still getting. I don't think it's necessarily Bessent weighing in there. I think it's just the U.S. having an advantage of being the world's largest government bond market.
The 10-year currently yielding 4.64, the 30-year at 5.18. So yields up 1 basis point, but yeah, still they have
Thomas Parton weighing in with his view that there will be a reckoning at some point. It's just defining at some point is, he says, impossible.
Skylar, thank you very much indeed. Skylar Montgomery-Koenig from our Markets Live team, of course. On the equities front, European stocks are currently flat. Maybe there's a bit of staying on the sidelines ahead of these risk events then, with inflation, of course, and Nvidia. Yeah, and in terms of that US futures picture, flat to negative really on those stocks, down 0.2% on NASDAQ futures. That is it for the opening trade. Have a good day, everybody. The Pulse is up next. This is Bloomberg.